Some people find accounting pretty much like this. But by the end of this tutorial, you'll say,
So much fun!
let's do it. Hey guys, welcome to Everything Business. Today I'll be introducing you to CSEC accounting. My name is Serain Jackson, and let's get right to it. Now, the first stage of the accounting process is what we call bookkeeping. Now, what is bookkeeping? Bookkeeping is the recording of business transactions in books or by using computers. Now, what is accounting? So accounting is the process of controlling the money in a business so that wise decisions can be made. Why do we need to do accounting? Accounting helps us in many ways, right? First and foremost, accounting helps you to record important business information such as monies received, monies paid out, or monies spent. Accounting also helps you to budget your money, which is planning on how you're going to spend your money. Accounting also helps you to make wise financial decisions. Who will now use accounting information? The owner of the business definitely will need to use accounting information. A person who wants to buy the business would need to use accounting information. I am sure if you are going to buy a business, you would want to see how profitable that business is before making such a purchase. The bank will also need to use accounting information. Someone who wants to become partners will also need to use accounting information. So there are some important terms that we need to learn in accounting, right? One of which is assets. Now, assets are all resources owned by the business. Assets can either be fixed or current. You know what assets are. You can look around your house and you will see assets. You will see the furniture, you will see the building, you will see the land. All these are examples of assets. Then we move on to liabilities, another important accounting term, right? Now, liabilities are money owed by the business. For example, loans, that you may borrow from banks or other financial institutions. Capital is another important accounting term. Now, capital are resources invested by the owner into the business. It is usually referred to as money, but really capital is more than money, right? It can really be anything that is invested into the business, and once it is making you money, then it's capital. Accounts receivables or debtors. Now, these are people who owes you money. Accounts payable. These are what we formally call creditors. Now, these are people who you owe money. You would want to keep your creditors to a minimum. Now we can talk about the accounting cycle. The accounting cycle is also called the accounting process in some textbooks. Now, the accounting process or the accounting cycle has 6 basic steps. First and foremost, we start with source documents. Then we move to the books of original entry. Then we move to the ledgers. Then we move to the trial balance. And then we move to the final accounts, income statement, formerly known as trading and profit and loss account, and the statement of financial position, formerly known as the balance sheet. I will discuss these steps in more detail later on in the course. Now let's talk about the accounting equation. Now, the accounting equation is the base of accounting. Once you can understand the accounting equation, then you are on your way. Now, the accounting equation is assets equal capital plus liabilities, and the name gave it away, equation. For we're talking about equation, we know that we'll be talking about some mathematical problem. Yes. Now, the accounting equation, simply explained, is your assets, which is all the resources owned by the business, must be equal to what you invest, which is capital, and also what you borrow from financial institutions, which is your liabilities. So your total resources would be equal to what you invest plus what you borrow. All right. Now let's look at this little table here. Now this table shows assets, capital, and liabilities. Now the thing about the accounting equation is if you know any two item or elements of the accounting equation, you are able to calculate the other element that is missing. So for example, in the first line we have assets, we don't know what that figure is, and then we have capital 100,000, and we also have liabilities 500,000. So if I want to find my assets figure using the accounting equation, then I know that my assets figure would be my capital figure plus my liabilities figure, which would give us $600,000. Very good. Also, the second one, you realize that the liabilities figure is missing. Now, if we want to calculate the liabilities figure, we would what we call transpose this formula. So liabilities would be equal to assets minus capital. So if we take away our capital from our assets, then our liabilities figure would be, here we go, $150,000. All right. Now, do you think you can calculate the other two? Please do so and leave your answers in the comments section below. All right. So let's review. We learned about bookkeeping. We learned about accounting. We learned why accounting is important. We also discussed who will use accounting information. We looked at some key accounting terms. We also examined the accounting cycle. And we looked at the accounting equation. So there you have it. Introduction to CSEC accounting. That's all you'll need to know. And we will get into more detail in my next lesson. Please remember to like, subscribe, and share. Thank you very much.